Hello, everybody, and welcome. I hope you're all having a great November and you had an amazing Halloween. We'll go into a Q&A on what everybody's favorite costume was. But before we do that, let's get into some really good and important content. We're going to be talking about planning and strategizing for year end. We are so lucky to have two amazing people on the live stream with us, and I'm going to get to them in a moment. But the goal of this seminar is to help you start planning, not just for taxes, but also just planning in general. As many of you know, a big part of what we do is long-term strategic planning, 6-month planning, 1-year planning, 3-year planning, 5-year planning. And this is a great time to do it. And this is when all of our clients do that. So we're going to touch on that, and we're going to give you some great advice on getting that. How we're going to do that? We got two amazing people with us. First, somebody who I have known and trusted for a long, long time. He's a CPA. He's got amazing other credentials. Always lean on him. He's always there when I ask a question. He's always giving me the best answer possible, Mr. Jason Nuttall. He's going to introduce himself in just a moment. The other person we have is just an absolute rock star in our industry. I don't even know if she needs an introduction. Maybe I won't even bother because I can't do her justice. Taylor from Great American. She knows everything about everything. She is absolutely incredible. Taylor, we're going to get you a lasagna recipe at the end of this because I know you know everything. All right. So with that, what are we going to talk about today? So we're going to talk a little bit about tax strategy in Section 179. For those of you who have outdated equipment, I'm looking at you guys, especially you with Server 2012s. Shame on you. How do you upgrade that and get the best tax advantage of that? We're going to show you how to do that. But then also, how do you do it in a cost-effective manner? There are ways that you can do that without killing the bank. That's where Taylor comes in. So with that, first I'm going to do is I'm going to throw it over to Mr. Jason Nuttall. Absolutely amazing. Jason, take it away.
Hi there. My name is Jason Nuttall. I'm a CPA with Damiano, Burk, and Nuttall. Been in practice for about 30 years now, and I can tell you that I've seen this topic we're going to be getting into detail, Section 179, grow from $10,000 as the maximum amount you could deduct annually to all the way to $1,160,000. We're going to get into a little bit more of that in detail, but before we do that, I'll toss it over to Taylor. Taylor McDonough from Great American Financials. She's the financing guru, and she will introduce herself.
I need to bring both of you along everywhere I go to provide epic introductions like that. Those were awesome. I'll keep it short and sweet, but my name is Taylor McDonough. I'm with Great America Financial. We are a 32-year-old privately held and family-owned equipment finance company headquartered in Cedar Rapids, Iowa. And to both Jason and Kenny's point, really we're just here to help you maximize your budget and see the greatest ROI for technology purchases that are coming down the road.
Terrific. All right, so the format of this is going to be a live Q&A session. What we want you to do is post questions in the chat, somewhere in the chat. I can't see what you can see, but there's some chat thing. Just look for it. Post a question in there, and what we're going to do is start answering those questions. But Jason, anything that you can start us off with on what's the best practices?
Yeah, please allow me to elaborate a bit there. So, Section 179 is a immediate deduction. It's 100% write-off. And some people, like to use this in tandem with what's called bonus depreciation. Both are very tax advantage ways that you can invest in your equipment, as well as other furnishings and property. Anything the IRS calls Section 1245 property, but I won't delve too much into the actual IRS section. I can just briefly, I can tell you it includes all office equipment, furniture, fixtures, servers, network connections, and the like. Pretty much most everything other than intangible assets will include purchase software, and it would also exclude real estate. You can't write off your building purchase all in 1 year. That would be wonderful, but not to get too far off topic, but the certain components of that building you may be able to write off. But yeah, no, it's definitely something that at end of year, I always call these last 2 months of the calendar year my traveling road show. Well, I used to actually get on the road a bit more. Now it's all electronic in this day and age, but just checking in where you are year end to see, okay, where's my profit, and what can I do to get down my taxable income. And a lot of times we point to, what purchases were you contemplating? What's going to make your business run more efficiently? And, in those cases where there's a need for that additional equipment and upgrades, we might as well take advantage of this tax deduction in Section 179. One thing of importance to note, a lot of practitioners, when I won't go too far off topic with bonus depreciation, but when bonus depreciation came along, a lot of people jumped on that bandwagon. But most states only allow up to the Section 179 limit, as opposed to bonus depreciation, which had high an unlimited deduction federally. But there was a state tax difference, and that's I've always thought that 179 was a little bit overshadowed. I think that's going to come back now that bonus depreciation is only 80% of the value of whatever asset you place in service. So I think that brings 179 really back into the conversation as a real great vehicle for you to get some tax savings.
All right. Well, you guys can see why I like Jason so much, because he had a whole bunch of important stuff that I actually might have even understood that. That's how good he is at taking this complicated junk and making it so that somebody as dumb as me can understand it. Taylor, how does Great American fit into all of this?
Yeah, absolutely. So when you are reaching the end of the year and considering really making the most of any tax benefits that are still available to you, a lot of folks wonder, if I don't, pay cash up front and I look into a finance model, will I still receive some of those same benefits? And I will never say that Great America or myself are tax experts. That's where we leave it up to folks like Jason. But under certain types of agreements, you can benefit from the same types of benefits under Section 179 and bonus depreciation while utilizing a finance agreement. So you see those tax benefits in the same calendar year, but you're able to pay over time and leave some capital budget for purchases into 2024.
Awesome. So we have a question that I think is actually going to be relevant for both of you in two different aspects. Jason, I'm going to start with you on this part of the question. Does Section 179 include labor costs?
Yes, it would include outside labor costs that are associated with placing the product and service. Your internal labor, not so much, but certainly, any ancillary costs related to that installation are included.
Great. Taylor, for you, labor, like most people are used to leasing equipment, tangible things. Can they lease part of the labor as well?
Yep. So that's one of our most frequently asked questions. So when you think about what you're able to bundle into a total finance solution, most folks only think it may be the hard assets, but we can really finance anything that you would stroke a check for up front. So when it comes to any of the hardware, software licensing, as well as upfront labor implementation costs, we can bundle that all into a single finance agreement for you. Even if your project is 100% labor. So we've seen a lot of cloud migrations over the last few years post-COVID, or security onboardings and assessments that may not have a true hardware component tied to it. We can help you stretch those payments out 12, 24 months because it may or may not be something that you've budgeted for.
Excellent. And are there what can people lease and what can they not lease?
Yeah, so typically, rule of thumb, I say anything you can stroke a check for up front. I'd say finance technologies that are connected to the network, like computers, IT infrastructure, networking, phone systems, AV, physical security, software, and then labor and upfront implementation as well. We're hardware agnostic, so we don't require any specific brands of equipment. That's where we'll let the new charter folks guide you there. But yeah, at the end of the day, really any upfront costs, what we can loop into total finance package.
Sure. And Jason, sort of a similar question. Is there anything that would fall outside of the Section 179 that would kind of be like a red flag for the IRS?
Yeah, no, for the most part, it's, your costs can all be grouped together with that particular asset, inclusive of your sales tax, your installation fees, anything that's going in that's directly related to that particular asset is grouped together and is eligible for Section 179 expensing. I should mention, I don't think I mentioned this earlier. There is a cap on how much equipment that you can do. So the deduction itself is limited to 1,160,000 here in 2023. The limits go up each year, but to the extent that your total purchases exceed, I'm gonna cheat here. $2,890,000. The deduction is phased out dollar for dollar for every dollar above that. For most, most companies, that doesn't quite come into play, or at least the ones that I see. I mean, you're talking about that being fully phased out somewhere around $4 million of technology. I think at that point in time, you're talking about some pretty large publicly traded companies that are not as concerned about this 179 deduction.
Great. Awesome. All right. The next question I'll actually take on, which is how do we avoid overpaying for equipment at the end of the year? So it's a great question because there is usually a big rush at the end of the year for equipment. So you really do want to get your equipment on order as soon as possible because I'll let Jason elaborate on this, but you want to take delivery of it before the end of the year in order to be properly accounted for it. So how do we do that? So I can talk what we do at Braver. One thing that we have the advantage of is we have multiple vendors, but also we're one of the largest managed service providers in the country. So we have a lot of leverage with those vendors where they have extra equipment that they're actually holding for us, which is great. But also we have the best pricing. We're quite honest with our customers though. If some like Best Buy, Amazon, or something like that, if they have a price that even we can't meet, we're actually very honest. We'll actually tell our clients that. The reason that we do that is our team doesn't work on commission. There's no commission structure at all. They're not looking to make that sale in order just to get the sale and get the commission. They actually want you to be as satisfied as possible, and that's why we don't do a commission structure when we do it. But having that ability to have that large scale, we also keep equipment on hand. We're one of the few managed service providers. We literally have an entire inventory system at our location in Massachusetts, and then also across the country, to make sure that we have equipment available on demand. But really what we're doing is you want to try and get in as soon as possible and get the order in as soon as possible. But like I said, one of the things that we're able to do is leverage that mass scaling. That's why a managed service provider is really great for ordering that equipment in that scenario. That basically helps out. Taylor, what happens at the end of the lease with the equipment?
Yeah, absolutely. So we'll have initial conversations between the new charter teams and your customers, really just to determine how we can best structure a custom payment solution specific to your goals. And so one of the questions that we'll ask is, what are your goals in the equipment once we reach the end of the finance term? We have a few different agreements that we can write it on that either allow you to outright own the equipment at the end, or some of the more popular agreements allow you to refresh into new gear at the end. Because for most folks, your equipment is a paperweight, it's not worth anything, and you don't want to own equipment that's reached the end of its usable life. So in a lot of scenarios, we're structuring agreements so that you can easily refresh into new gear at the end.
Great, awesome. So Jason, how does that have any effect on the Section 179 if you're keeping the equipment, leasing the equipment, or anything like that?
Yeah, I mean, most leases nowadays, they're structured in such that they're called capital leases, and as such, you're capitalizing them onto your books, your accounting records, and once you've capitalized it, then it becomes depreciable under Section 179. Yeah.
And so I touched on this briefly, and I'm sure I did a horrible job with it. So maybe you could touch on it a little bit more. The delivery of the equipment. What are the regulations, and what does that need to meet the Section 179?
Yeah, so the IRS would like these and any new capital additions that you're making, they'd like them to actually be in service as of the end of the calendar year in order to be able to deduct them in that year. So it's one thing. I mean, sometimes people, they wait too long and they're rushing, to try to get them in and get everything up and running by the time 12/31 the clock strikes. So I think a lot of that can be avoided by planning in advance to have the equipment on order and ready and allow for some sufficient time to get everything connected.
Excellent. Taylor, how long does the financing process take? Is this just like basically just call you up, you guys send it over and you're done, or is there you guys actually do like a credit check and stuff?
There is a process in place. We do try to make it as simple and seamless as possible. So we'll all work together to work out pricing and structure and all of that. But once the customer is ready to move forward, we'll do a soft credit check on the organization. This won't ding your credit like it would a personal credit check. We're truly just looking at public information found on sites like Dun & Bradstreet. We don't need you to fill out a credit application. We truly just need your business name, address, phone number, and total project cost. Typical turn time is about an hour or two for deals under 100,000. So we can get everything approved pretty quickly. And then from there, we'll send you a 2-page agreement via DocuSign, and we're off to the races from there. So,
Awesome.
I mean,
Terrific.
if we're all working quickly together, it can be accomplished in a day.
Wow.
Terrific. Awesome.
That's
Excellent.
amazing.
They are very good. There's a reason that we deal with Great America. They are the gold standard, without a doubt. Jason, what about year to year? Are there like Section 179 limits that hit like this year that carry into the next year, or is there?
So
or is it just every year?
Yeah, I see that question popping up here. The limit does change every year, and actually, this is a good time to maybe segue that Section 179 can't create an operating loss. You can reduce your taxable income down to zero, but you cannot get into negative territory where it gave you $100,000 loss or $200,000 loss, and you're using that loss to offset other ordinary income. So what happens is the Section 179, you still claim it in year one, and it brings your income down to zero. And if there's any remaining 179, it actually carries forward to the next year. So a lot of people, don't mind that. Okay, I know I'm starting off the next year having this extra tax deduction in my pocket and ready to go. So it's just one thing to manage. There's a little bit difference there with the bonus depreciation, where the bonus depreciation actually could create a taxable loss, and maybe you have multiple business lines, or you want that business loss coming through an S corporation to offset your W-2 wages, anything along those lines. Maybe the bonus gets you a greater benefit. But that's one of the things, just talk to your tax advisor about, and we'll be able to compare and contrast Section 179 versus bonus and determine, well, this is what we think is going to work best for you. I know that I do that analysis, quite often, and try to get my clients the best deductions, not just in one particular year, but over a course of years, so we can minimize the tax bite anywhere we can.
Excellent. Taylor, so we're going to go through. We'll touch on some closing remarks. Who are your best clients, and how do they fit your narrative best? And any other things you want to add before we wrap up?
Yeah, so I'd say really any clients who are looking to stay compliant and want to keep their equipment consistently refreshed. That's truly why we see a lot of folks go the pay over time route. It's not always because they don't have enough cash available on hand. They just see the benefits of getting on a consistent refresh cycle and having an easy to budget and predictable monthly expense for all of their technology needs. So I'd say those folks. Additionally, just those who prefer to leverage their cash in different ways and not tie up some of that capital on a depreciating asset like technology. A lot of times I just ask folks when they're considering financing versus paying up front, are there any other areas of your business could you invest in and see greater ROI versus tying it up in a depreciating asset? So I would say we see customers from all over the board, really throughout any industry, but we really see it for folks who want to stay compliant and keep their technology consistently up to date.
Awesome. Jason, what's your ideal client, and how should they reach out to you, and any other closing remarks that you have?
Oh, sure. Yeah, I mean, my ideal client, we run the gamut here with industry served. We primarily deal with companies size, maybe 2 million in gross revenues, all the way up to maybe 100 million. It's just anybody that's looking for that proactive tax advice, that wants to have someone that's involved with their tax planning to take advantage of things such as 179 and bonus depreciation, as well as other opportunities that are out there to help reduce that tax bite each year. My website is dbncpas.com. If someone could start there if they were looking to track me down. Thank you.
Awesome. Excellent. So I'm Kenny from Braver Technology. So we're a managed service provider. We're located in the Northeast, but we're part of the New Charter family. The New Charter is might be the largest, could be the second largest MSP in the nation. That allows us to give local IT support to everybody in the New England area, but then also have a national reach. Many of our clients take advantage of that, both from the buying scale, the leverage scale, the knowledge scale. If you have any IT need, managed service provider, website design, SEO design, activation development, but then also a national presence. We have a lot of clients that have headquarters in the Boston area, but then have locations across the whole country. We're available to help you on all of that. Basically, we're amazing. If you want an MSP that could be absolutely incredible with a great personality, that's us. Jason, Taylor, you guys are rock stars. I know you guys would nail this, and you did. Thank you so much for your time. Hopefully, those of you who are watching are going to get a great benefit out of this, not only this year, but also years to come. Anything else? Jen, did I miss anything else? You got your little chat thing going on. No? She said it's all good. So she said we nailed it. As long as Jen's happy, I'm happy. So anyways, everybody, thank you. Thank you. Oh, Marcy, is there anything that we need on your end? I didn't see you anywhere chatting on this. She's just in the background. They're all just too shy. All right, she said we're good too. All right, guys. Thank you so much again for joining us. Have a great day.
Thank you.
Thank you, guys.